what we're going to do. So let's just jump right into it. Before we dive into the VA loan program, I think it's important to appreciate just how many people this benefit impacts. Today, there are approximately 1.33 million Americans serving on active duty in our military. In addition, there are roughly 17.5 million living veterans who have previously served and transitioned back into civilian life. So that's a huge amount of people that the VA loan can benefit. Um, the VA home loan program is one of the most powerful benefits available to these service members and veterans, yet many eligible borrowers and even many real estate professionals don't fully understand how it works. And that's exactly what we're going to cover today. And I can attest to how little veterans know because my husband is a veteran. And when we were in the military, it was a couple years, so I even knew that there was a benefit to help with home purchases. And then I didn't even know what it was until he was well out of the military and a realtor talked to me about it. So it's really important for realtors to know this information because you're on the front line. So, what are VA loans? One of the biggest misconceptions I hear is that a VA loan is a loan from the VA. It's actually not. A VA loan is a mortgage made by a private lender, such as Canopy Mortgage, and it's partially guaranteed by the U.S. Department of Veteran Affairs. That government guarantee reduces the risk for the lender, which allows for some very attractive benefits for eligible borrowers, which includes competitive interest rates, right? The most well-known benefit, though, is up to 100% financing, meaning many veterans can purchase a home without a down payment. VA loans also do not require monthly mortgage insurance, which can significantly improve the affordability when you compare it to other loan programs. Even those with low down, they can't compete without the monthly mortgage insurance. Another advantage is the qualifying guidelines. VA loans tend to be more flexible than many conventional programs or any other loan programs out there. So while debt to income ratios are still important, VA also evaluates what's called residual income. We won't jump into that because you just don't care about it. So again, we're going to kind of skip over the things that just like you don't need to worry about, but what we want you to know is that essentially using the residual income option, the amount of money remaining after each major obligation, monthly obligation, allows that veteran to qualify for even more than they could on, say, a conventional loan. So think of the VA guarantee as the government's way of helping lenders say yes to veterans more often and with better terms. So really fabulous program for them to take advantage of. So how does a borrower eligibility work? So it's a very common question. So who is actually those that can qualify? For active duty service members and veterans, the general rule is relatively straightforward, and they've made it a lot easier than they have in the past. Eligibility is typically earned through a minimum period of active military service, and in most cases, that means 90 consecutive days. It can vary slightly depending on when someone served, but that's the general time frame. Active duty service members don't have to wait until they leave the military, which so many of them do. Many become eligible after serving those 90 continuous days and can start using the benefits while still serving in the military. National Guard and Reserve members have a slightly different path. Traditionally, they became eligible after completing 6 years of qualifying service. However, they recently made some changes, and many Guard and Reserve members can now qualify much sooner if they have been activated under qualifying federal orders. So, in many cases, just 90 days of active duty service, including at least 30 consecutive days, may establish that eligibility. So, the key is don't let a client who has served disqualifying themselves. Like they can do that so easily. And it's really helpful when you can encourage them just to check. it's surprisingly how many active service members and veterans just don't understand the requirements. So if you have a client with a military history, it's worth having us review their eligibility before letting them rule out a VA loan. And one of the best things you could do in some of your basic questions is just ask, have you ever served in the military? And that will kind of help you know to lead them down that path of just checking things out, which is so easy. And with that, what we do is to make sure that a veteran is eligible is we get their certificate of eligibility. Now, another common misconception about that certificate of eligibility is that it's a very complicated or long process. Like back in the day when me and my husband got our first VA loan, we actually had to mail out to get our certificate. And so we had to wait for it to go there and then come back. And so if there was a question in those days, it might take a little bit of going back and forth, but it is so much easier today. So in most situations, we're able to pull the certificate of eligibility instantly through VA's automated system. So within seconds, we can verify eligibility and move forward with the loan process. Now, occasionally the VA needs additional documentation to confirm eligibility, and this is more common with certain Reserve or National Guard members, veterans with unique service histories, or situations where records are just incomplete. But when that happens, the borrower simply provides us with the requested documentation, and then we take it from there. We know what forms are needed, where they need to go, and how they need to be submitted. So once the VA receives that documentation, they typically review and process the request in about 3 to 5 business days. The important takeaway for realtors is that your clients don't need to figure this out and call VA and spend time on paperwork trying to navigate the VA portal. Just know we can handle all of that for them so they can stay focused on finding the right home. Now, the product specs. This is another one that military members just are not aware about. So let's talk about what types of properties can actually be financed with a VA loan. First and foremost, though, what's really important is that individuals understand that VA loans are intended for owner-occupied properties only. No second homes, no investment properties. The veteran must intend to occupy the home as their primary residence, generally within a reasonable time frame after closing. And that general idea is within 60 days, but there are flexibilities with VA, whereas other programs don't have them. So again, it's really good to get that veteran in early to have discussions before they rule options out. The VA loans can be used for more than just single family homes. Eligible property types include single family residences, VA approved condos, and even 2, 3, and 4 unit properties, as long as that veteran occupies one of the units as their primary residence. Now, one thing I want to say is if it's an active duty military member, that veteran's family member, spouse, in most cases, can certify the occupancy intent for them, which again is just one of those really great flexible options with VA. Now, maximum loan amounts are based on eligibility. This one can be a little bit more complicated, but it's still very, very generous. So if a veteran has full entitlement, VA actually does not have a loan limit. But remember, VA backs the loan. They don't make the loan. So if the loan amount is above the conforming loan limit for the area, it might fall into a jumbo VA loan where there could be additional restrictions with that additional higher price point. Now, I want to talk about subsequent use. This one is probably the most common way veterans will disqualify themselves. And so it's really helpful for you guys to have an idea on how subsequent use works. So if the veteran has an existing entitlement charged against them, meaning they have financed a home, they have a VA home currently financed or one in the past, their entitlement, their maximum loan amount backed by VA will depend upon the conforming loan limits for the area and the outstanding entitlement charged against them, which has a funky calculation. So it's really hard for a veteran to know how much they can qualify for, even if they know the loan limits for the area. So when a veteran uses their eligibility more than once, it's called subsequent use. So I want to dig into this one a little bit deeper and just kind of give you an example of how it kind of works. So again, it is a little bit of a mystery. And we're just going to go slide by slide on an example. So let's say a veteran owns a home in Idaho backed by VA that they wish to keep. So they want to keep it. They don't want to sell it. So they're going to keep it. So that entitlement is going to remain charged against them. Their initial loan amount was $605,000. So that with VA's guarantee of 25%, their current entitlement charged is $151,250. So they have two job offers, one in Alaska and the other in Nevada. So the question then becomes, what is their maximum price point with no down payment for each area? All right, Alaska's loan limit is 1.2 million, so over 1.2 million. Nevada's loan limit is just over 832,000. So big differences. So one thing that I want to illustrate here is that area where they're going to purchase matters. Now, the max purchase price with their entitlement that's currently charged against them, with no down payment for them, is 644,000. So that's what VA is going to guarantee without requiring a down payment. Nevada's, with that difference in max loan amount, based on their area, is going to be $227,500. So let's say this, and they're looking in both areas, and they have found homes. They're still not kind of weighing their options, and the price points that they're looking at is at 700,000. So most people assume you take the 700,000 minus the maximum, and that's the difference they have to come up with. Which, that's where my mind would go to if I didn't understand VA's calculation methods. So same thing on Nevada's, but I want to show you surprisingly how it works. So if that person was purchasing in VA, based on the 25% that they will guarantee, it is funky, people. I won't lie, and we're not going to go into it because I don't want to waste time on it. But with Alaska's loan limit, if they wanted to purchase 700,000, they only had 644,000 available. They only need to put under just under $14,000 down to make up the difference for VA. In Nevada, all they have to do that just looks like such a significant difference, but all they'd have to put is $118,062. So you can, if they went down further to 600,000, you kind of played with those loan amounts, this amount that their down payment would reduce, of course, as well. So really what I want to show you here is that it's not dollar for dollar. So when we have veterans in and we're talking about this and we're talking about subsequent use, they're surprised every time at how little they have to put down if they're going over that conforming loan limit. So again, tons of flexibility. No, this is less than 20% down, still no down payment, even in Nevada. So someone can still purchase and not have to worry about that and still get really great competitive interest rates using the VA guarantee. So just some quick little fact checks. VA loans are some of the safest loans available with a track record of low foreclosure rates. And that's really important because there's a lot of flexibility in VA. And so some people will think, oh gosh, that's putting that veteran in a situation where maybe it doesn't look as affordable, but they look at that different methods of debt to income ratios and things like that. And when you look at the facts, the foreclosure rates are actually quite low. VA loans on average are not slower to close than conventional types. And so that's another common misconception out there. And that's just not the case. And then VA loans can be used for new build or existing. That's another common question that I receive is you can most certainly do new build with a VA loan. So we want to be moving our heroes home, right? So what we really want to let them know about is that there is no down payment. we all assume sometimes that they just know that, but I promise you, there's so many veterans out there that do not realize that they don't have to make a down payment. And there are varying credit and qualifying standards, so much flexibility with the VA option. And then with those competitive interest rates, it just makes things more attractive when you combine that with no monthly private mortgage insurance. Now, how do you get the information out there? Here's a flyer that an example, we're going to send you with this recorded um, uh, class that you can push out if you want to, that just kind of highlights some of those key benefits. There's another one that we can do where you can be co-branded. So you give us your information, we'll stick it on here, we'll co-brand it with you, and you can send it out to your database. But for sure, just take some of these little bullet points and do some social media posts on it. So if you take away anything, just try to use it in your own marketing for just highlighting some of those benefits to try to get that information out there to help more veterans realize homeownership. Now, before we take questions, I do want to highlight one class that we have coming up, which is going to be a super awesome class. And Jared, you might jump in to maybe share a little bit about this. But you'll see here it's an AI class for real estate professionals. So this is going beyond Chat GPT with like prompts and things like that. Chat GPT is amazing. I use it all the time, but this is a level beyond that. So Jared, do you kind of have something that you could kind of highlight about what they can expect with that AI class? I know I'm putting you on
Yeah,
the spot.
so I think one of the biggest challenges whenever I've seen an AI class or um, the feedback that I've heard or even had myself is a lot of times with AI classes you'll get a lot of information, but you can't really. It's hard to translate that into actually something that you use or that you utilize in an efficient way. So one of the things that kind of going to go over in that would be a practical way. So everyone sends out updates, and if you don't, whether it's updates to your buyers or your sellers or just people in a transaction or whatever the case may be, everyone sends those out. If you don't, this will be great. But it's essentially like one upping that and making it everything look really professional. There's obviously a ton of AI tools out there, so we might highlight some of those tools. Um, and really it's designed to help you guys. So the point will be to build out something. So I'll give you some stuff. I'll go through an actual example of it. I'm kind of putting a lot on the line here because I hope that it works. You cross your fingers sometimes when you do it in real time. Um, but the idea would be to create something in real time with you that you can recreate yourself for your own situation. Because everyone, this is the trickiest part about AI is everyone's doing something different, or they have different focuses, or they have different things that they care about or don't care about, or different processes, everything. So to build to share something that's valuable is would be more helpful on a one-on-one basis, but um, the value can come in the idea. And so I'll share some ideas of how I'm utilizing it, and then kind of share, in real time how we can do that, and then obviously go from there. But it will be, if anything, it's going to be impactful. And how much you take out of it is up to you. But it goes up and above like generating an image of yourself on ChatGPT or something that then you can't even use, or I don't know, can't even recreate. I don't know. So it should be pretty dang good. I'm getting feedback from people. So if you guys do have anything that you are wanting to point out, or some AI help that you think might be good, or some topic in there that you think might be good, I'm still building out the class in its entirety. And I've gotten a ton of feedback already from people, but the more feedback, the better on what you think will be valuable to get out of an AI class. Because I use it a lot, I play around with it a lot, and I've seen some benefits myself, but there are some shortcomings. And so it's important to recognize that too, because it is not the one stop shop, and it does not solve everyone's problems. So, anyways, yeah,
Yeah, thank you for
sign
that, Jared.
up.
I'm really excited for that. We kind of went through this VA class quite quickly because, again, we just want to get you the content quickly so that you can take it and then run with it. The AI class might go at least anticipate that 30 minutes, full time 30 minutes, because there's a lot in there. Now, any questions that have popped up since we started?
I think the only question, and I think maybe I'll help answer it too, because it was from before, but it had to do with you'd mentioned that there's no loan amount on VA. And then on that other slide, you kind of went through how they would be capped out and maybe have to do a down payment. So there's no max loan amount, but possibly down payment. And I think all of that is answered at the very, very top of the slide. It just said that if you want to keep, if they're trying to keep that current home. So there becomes
Yeah.
an issue with that whole loan amount thing. If you're trying to keep your home and there's only a certain amount of entitlement available or a certain amount of VA benefit amount available. And so that whole caveat or the whole crux of that question relies on the fact that those people in that scenario that she was presenting were trying to keep their home in Idaho and
Yes, so
buy
they wanted
another
to keep
one. So
it.
they
So
had
that
to
means that,
do
yeah,
a little
the
math.
entitlement would remain. So, like when we purchased our house, entitlement was charged against it. We, few down the line, had so much equity and rates are really great. And we wanted to pull equity out, and we just did a regular cash out refinance, and it was a conventional loan. So like right now, my eligibility that has been charged is at zero. So if we wanted to do another loan, even though it would be subsequent use, we would not have a loan cap limit because we have nothing charged against our entitlement. But if we did, then we would be capped out based on whatever entitlement was left over. So, if that did not clarify your question, please let us know and we can definitely dig into that deeper. Um, Especially in a one-on-one. So one thing I want to say is on the AI class too, is if you just want to shoot Jared or I a text or an email to RSVP for that, we'd be happy to take care of it for you. And you'll get those invites, those calendar invites. So with that, we're done. We're done a little bit early. Yay. I love it when meetings end
Perfect.
early.
Better than late.
Yes, everybody take care.
See you guys.